Well, hey, Southern Oregon, welcome back to the Real Estate Show. So glad you could join us again today. I'm Alice Lema. I'm a broker here in beautiful Southern Oregon with John L. Scott Real Estate and your host of the show. And today we have a special treat because Guy Giles of Mutual Mortgage is coming back on the show to talk to us about the bigger than expected interest rate cut from the Federal Reserve Bank this week. So some of you may have heard it was a whole 0.5% reduction this week by the Federal Reserve. And that is going to have some kind of effect on the housing market nationally and here in our Southern Oregon housing market. So Guy Giles from Mutual Mortgage is going to come into the studio here in just a little bit and talk to us about what that all means and when we can expect to see some changes. In the meantime, let's check in with our local housing statistics year over year this week. We're going to start with Jackson County. Jackson County prices year over year were down 10% this week. The average single family home selling for $467,086. The number of solds year over year in Jackson County were down 36% this week. There were only 40 closings in the residential market on SOMLS this week in Jackson County. The number of listings year over year in Jackson County this week were up 12%. That's the extending of the trend. 12% increase in number of listings in the residential market this week. We have 840 active residential listings on SOMLS this week in Jackson County. Josephine County prices year over year were down 9% in the residential market. Average single family home in Josephine County this week costing $457,600. The number of solds year over year in Josephine County were down 23%. There were only 10 closings on SOMLS in the residential market in Josephine County this week. The number of listings year over year in Josephine County were up 12%, another trend extending this week. We had 414 active listings in Josephine County's residential market this week. Klamath County prices were up 39%. Klamath is our big winner again this week, 39% year over year. The average single family home in Klamath County this week costing $448,867. Congratulations to Klamath County. The number of sold year over year in Klamath County, however, were down 7%. There were only 12 closings on SOMLS in the residential market on Klamath County's this week. The number of listings year over year in Klamath County were up a whopping 23%. There were 372 active listings on SOMLS in Klamath County's residential market. So ongoing trends, we're going to watch it carefully week after week like we do. And in the meantime, let's welcome Guy Giles from Mutual Mortgage back onto the show this week to talk about what happened with the Federal Reserve Bank's announcement. It's going to be a very interesting conversation. And we want to say, well, Guy Giles, thanks for coming back on the radio show.
Well, thanks for having me. I can't believe summer's pretty much over and time to just focus on work for a little while, I guess.
And it is a really, really big week. So we're here to talk about the interest rate change announcement yesterday. Before we dive into that, were you surprised by how big of a cut we had?
I wasn't at all. The only thing that surprised me that other people were surprised. I honestly, I anticipated a 0.5 point all day long. So not that I'm super smart. It's just you watch these things and they're going to have to get a handle on it, before November. So might as well make a bigger jump right now.
Gotcha. Well, the reaction to the stock market seemed positive. And how are things going with your buyers? Are you getting more phone calls, or
Yeah,
is it too soon?
well, it's kind of funny because we've already been dealing with this for a while now. We've known that our people don't wait for the feds to mess with the rates.
Gotcha.
We're traded on the mortgage-backed securities. So the people that are looking at these long-term investments are looking ahead. So everybody knew, for sure that there would be a rate cut. You know, I think most of the people I know thought it was going to be a half a point. A couple people thought it was going to be a quarter of a point, but we've already baked it in. I mean, usually by the time the Fed raises rates or lowers rates, we get a little bit of a glimpse into what's going on, and our investors have already priced it out. So if you really think about it, and I did a little bit of research in the last, year, a little over a year, we're close to 1.5% lower than we were from the height on our mortgage rates already. So
Nice.
what actually happened yesterday, it was kind of funny just because people didn't really know how to take some of the numbers in the bond market. We actually lost a little ground yesterday on rate when they lowered it by 0.5%. Now today we're pretty much flat with the beginning of yesterday. Well, sorry, by like Thursday or so, we were flat. So, the overall trend should still be getting better, but we already saw everything from this a while back, and we've already kind of baked it in, I guess, to
So
repeat the
is
same thing.
it, so your business picked up a few weeks ago then in anticipation of this?
No, I wouldn't say picked up. I mean, I think it's kind of the same thing we've been doing for a while. It's just stop, start, stop, start. I had
Mm-hmm.
really, really good funding month last month, probably as good as I've had in a couple of years. And then it seemed dead for a little while again. But I think people are a little paralyzed with this election coming up. Um,
Mm-hmm.
you just
Mm-hmm.
whether whatever side of the fence you sit on, it's going to go one way or the other. This
Mm-hmm.
whole country is. And, I think a lot of people are hoping that it's not a lot of the same old thing, that we do get some lower rates. And I'm hoping that we don't have to crash the economy, because I think we showed that a little while back where we could have a decent economy and low rates. So,
Yeah, yeah. And the other thing is we understand now how to deal with this kind of an economic environment. So like you said, one way or the other, there's not going to be the shock and awe of all the high interest rates over and over again. We're done with that.
um, yeah, I'd like to think so. Uh, I mean, I,
Well said. Well said. We can never predict what the feds are going to do.
yeah, I mean, and nothing changes the math I did, even when rates were over a percentage point higher. It still makes sense to own a house. And if
Especially in
you're,
Southern Oregon.
yeah, and if you're going to have, and most people don't have just $100,000 sitting in their checking account waiting to buy a house, but some do. And if that grows for you at a great rate, you're still not going to get the bang for your buck as you would investing it in a $500,000 house. So
Right.
it makes sense, no matter what the rates are. If you get in the house you want now, before before rates do drop down some more and everybody's fighting over the houses, you can refinance then. Again, we're not going to charge any bank fees for that. You'll still have your title insurance, but it's going to be a whole lot cheaper to get in there now and then worry about shopping the rate a little bit later.
Yeah, you guys are really good about the fees. You don't gouge people like some lenders do. Um,
No, we figure out other ways to get them with our interest.
mm,
Not that our interest is bad compared to everybody's, but I mean, at the end of the day, there's no reason to charge everybody $1 million to close a loan. And
mhm.
we understand, we'd rather see people buy now and get into a house and then talk to us about a refinance and then just, just give you a break at that point, just to kind of incent you to get done now because you're going to be a lot happier client. And really, we are looking for long-term clients, not just one-time things.
Yeah, exactly, exactly. So, what's your prediction about inventory? Because, um, it does appear that we're getting more listing appointments right now. And so whether that turns into inventory this fall or next year, but are you seeing some of that in your business?
Well, mostly what I'm seeing is the people that are ready to go seem to be able to find a house that they want, and it seems to be favorable terms right now.
Yes. Yeah.
I did have one gentleman out of Northern California moving over to Bend that I was dealing with yesterday, and he's thinking his market there in Santa Rosa or wherever it was will slow down a little bit going into the winter. So he might be hesitant to do it. So there could be other factors beyond elections, beyond rates, beyond different things. Everybody thinks spring is the only time to sell a house. So I think it's just case by case. Me personally, I'm not necessarily seeing trends, but a lot of times you guys see that a lot before I do.
Yeah. Well, I was just kind of wondering if people were coming in to get pre-qualified and saying to you that they had a house to sell.
That's definitely all the time with us, and it's just about how to negotiate. Are you gonna actually? We can talk a little bit more about that. When we have a minute in the next segment. But people are trying to come up with strategies to be able to comfortably move out of their house and then get into the next one. Maybe
Mm-hmm.
sometimes without writing a contingent offer, and we do have a couple answers for that.
Oh, yeah, yeah. It's been a while since we've talked about that. So maybe in the
But
segment we can do that.
yeah, most of my people right now are not. I think about 27% of everybody is first-time home buyers. Um, and at the moment, I'm getting people selling houses.
Okay, well, we're going to have to take a quick break. We're talking to Guy Giles, Mutual Mortgage, and also one of our great sponsors. Thank you for that. We'll be right back after a quick word. Well, folks, welcome back to the Real Estate Show. We just had a huge Federal Reserve rate cut announcement this week. So, Guy was nice enough to come back on the show.
We're all anticipating it and looking forward to it. I haven't really seen, other than maybe one or two people give me a phone call and ask
That
me.
was me. I
Um,
didn't think they were going to change the rates at all.
oh my gosh.
Well,
Well, I think that was a lunch thing that we bet. Just
yeah, no, you're absolutely right, and I will pay up. But they just have been so slow, and they change their mind all the time. So I just
well,
thought, why would they do it now?
you got 19 little mini feds running around, and then one that has to make the decision. So they're all voting and dissenting, and everybody's got a little bit of different idea. But let's face it, the country is made up of a whole bunch of different economies. We're not necessarily in a place that's filled with oil, and they're not in a place filled with natural resources. Not that we really use those anymore, but it's going to be all different for everybody. So if you have a Fed in Philadelphia, they might have a different idea of the ones in San Francisco. So it's
Mm-hmm.
good that they're talking and coming up with a consensus, but I think that really the catalyst that really gave them the opportunity to lower this was the unemployment rate. You
Mm-hmm.
know, if it got to above 4.2%, there was no doubt that they were going to cut rates because there is more of a dual mandate. Everybody just thinks inflation, 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 and they're shooting for 2%. Well, we've been saying for a few years there's really no way, to get to a 2% inflation. I think inflation is under control. Our economy has sufficiently slowed down, and they had to turn the focus to the unemployment rate. And
Mm-hmm.
out of the 19, what I'll call mini feds, 9 of them think that we're going to stay between 4.2 and 4.3% for next
Unemployment.
year.
Mm-hmm.
Yeah, and then 10 of them think that we're going to be between 4.3 and 4.4. I mean, historically, it's not terrible, but there's just a lot of people that we look at in the background that may not be eligible for unemployment benefits anymore. So they're falling off those rolls, and that doesn't mean that they got a new job. That just means that they're not on the unemployment rolls anymore. And,
Mm-hmm.
you know, no matter what, them lowering rates will help, and
Mm-hmm.
I've always, politics aside, been about the little guy. And I just really want somebody to have the same opportunity that I did. I had
Mm-hmm.
nothing when I started, and I got up and I worked every day, and it worked out. Um, And I just, want these kids that come in to see me or older people that haven't bought a house yet to be able to have that. And it hasn't really felt super attainable lately. Even even the millennials that have bought houses in the last few years, or actually in their history, because it's just a generation, 78% of them have had help from family members to get into their first house. So,
Yeah, and that family help has been super important.
well, yeah, yeah, and there is some good mechanisms for doing it, and it's like, what else are we doing other than just trying to set up our kids a little bit better than us? But I
Hmm.
would like to have the opportunity for the kids that don't have that to be able to work and to get a house also. And lower rates and inventory are the two things that'll cure that. So, hopefully
Hmm.
we're on our way for, well, at least one of them right now.
Hmm. Well, and before the last break, we started to talk about one of the side effects of the interest rates going down is that people who want to sell are going to start getting interested in buying because it's a more attractive environment to do that financially.
Yeah, I mean, it's hard to get rid of I have a lot of people coming up on anniversaries and I get little reminders of things. And I got a lot of people that I put in at 2.6, 3% rates a little
Yeah.
while back. And it's really hard to get rid of one of those. But, if you have a family that's growing or something, maybe you just turn that house into a rental. And, rents have consistently gone up and they're still going up. So, there are a lot of different options, as far as that goes. But if you just need to sell your house, you're up against cash buyers, you're up against everybody. We do have a mechanism for that. The guy that I spoke about earlier that was down in California, he had lost his wife, wants to get up closer to his kids in the Bend area, and he does not want to have the pressure of having to get out of a house before he gets into a new house. So he approached me about a bridge loan. And the bridge loan does cost a little bit of money. It costs about 2.4% of your residence that you're selling. But the way we structured this thing, it actually, because he's selling $1 million house, he ended up going in and lowballing it because he's a cash offer now. He lowballed him by more than what that loan is going to cost him, got the thing accepted, and he's going to be
Really?
into a house, so no harm, no foul for him at all.
Hmm.
And he doesn't have the pressure of getting out of his house. He'll have a few months to sell his house
It
after
is so much
he moves.
easier to do it that way if you can.
Yeah, and if there's something else we can come up with without doing the bridge loan, I mean, a lot of times we can just get creative and come up with some sort of an answer for you. And
Hmm.
happy customers is what creates repeat business. So we're not going to have you come in here and do something that's not the right thing for you.
Hmm. So in the scenario where you're getting the bridge loan, do you have to have a special down payment? Do you have to have a special
You're
credit score? What's the
they
mechanism?
you're not really even your house is pretty much qualifying for you. So that is an important thing. He does happen to own his house free and clear right
Oh,
now.
so if having a lot of equity in your original house is key?
Yeah, I mean, and I mean, most of the times it's used just for the down payment for the house. In his instance, it's enough where he's going to be able to pay cash, and
Uh-huh.
the thing worked out. But most of the time, you're just coming up with a down payment. So they'll go up to 75% of your departing residence equity
Really?
sometimes, but it's pretty much 70%, no questions asked. So I just assume go with that number. The other one would be a one-off if we need it. We can try for it, but yeah, a lot of people have a lot of equity in their houses these days, and you can just use it, and then like again, that gives you a few months. Your agent, if something happened and you weren't able to sell your house, they have bought it from you. So your agent that you had listing the house is still going to be the agent that's going to get to list the house. It's not like all of a sudden they take all that ability away. And the goal, and you still get whatever proceeds from it. So anyway, it's a little bit deeper than I probably needed to go just now, but we do have a good mechanism for the best bridge loan that I know going around here for sure.
No, that was helpful because there's details in there that can help our listeners because right now that's a conversation around every kitchen table is I don't want to live here anymore. Not every kitchen table, but a
Oh, I
lot
know what you mean.
of.
Well, things happen. The kids finally buy their own house, or you end up having another kid, or they're off to
Or
college.
job transfer. There's so
Yeah,
many job transfers.
absolutely. So you never know. And these people with 2.6% rates that I don't want to bother probably want to have a little bit of a checkup. So, I just
Mhm.
kind of call them to say hi, and if they have any questions, I can always answer them, whether I'm
Well,
doing
and you know what else is that's how you lock in your profit because it's not really your money in your bank account until you sell.
yeah.
And that goes for stocks or whatever asset class that you're investing in a primary residence. If you stay there for 10 or 20 years, you've got buku equity.
That's absolutely true. And you can use, the down payment for your next house and maybe not be in worse shape than you're in and be where you want to be in the
Hmm.
house you want to be. So there's, yeah, you're right. People are always going to be moving. I do think that it's going to be a little weird through the election just because, again, people are just, you know, there's just a lot at stake. So I'm thinking, after November, if everything gets reconciled, like hopefully it will right then, people will be, at least they'll know what they got, one way or the other.
What
So they'll be ready to
direction to
move.
go in? That's always the big question for markets, isn't it? What direction are we going in?
100%. Yeah, and I don't see, especially in this market, houses going down because there's just no way to build them fast enough.
Yeah. Well, and the desirability, we talk about this all the time. Southern Oregon has a combination of elements that is very hard to come by in other parts of the country. So we just always go up, even if it's just a little bit.
Oh, I know. I'm just waiting for the first rain so I can get back up in the woods and not look like Pigpen running around shooting up dust everywhere. So that's the biggest attraction for me around here, other than the water, is the woods. So
Well, and if you're not from here, it's almost hunting season, and we lose a zillion of our hunters, and they're not available to fill out forms and go look at houses.
I know my daughter said she didn't want to hunt this year, so it'll be the first year I'm not actually hunting in a while. So
Yeah.
I'm ready to be here for home loans while all those other guys are out hunting, I guess.
Well, and you're kind of unique because you do answer your phone when you're out if you've got cell service.
It's true. I have
Yeah.
taken a loan application in some very weird places, and the bed of my truck isn't even kind of the weirdest one.
So we're gonna have to take a quick break. We're talking to Guy Giles and Mutual Mortgage. We're gonna be back after a quick word from our sponsors. Don't go away. Well, good afternoon, everybody, and welcome back to the Real Estate Show. We want to remind you that this episode is going to be rebroadcast again tomorrow, Sunday, at 8 a.m. So you can hear Guy Giles talk about the Federal Reserve Bank interest rate cut today. Not today, sorry, this week, and all of the side effects of that. So thank you again, Guy, for coming on the show.
No, I'm happy to be here. To be honest, it was something that we have been anticipating for a while, and again, because we kind of look at things a little bit ahead, it was a little anticlimactic as far as that goes. I mean, the Fed lowered the rates, there was a bunch of news about it and everything, but nothing really changed in our world other than, a little spike up on Wednesday with the rates, and then they settled back down, and I believe that they'll just continue on their trajectory down. So I'm not sure exactly what all news I was going to bring here, but it will be a nice relief for anybody that's got credit card debt. One of the things that the Fed did mention, that spending was still really strong, but just like I always put a little negative spin on everything, and being a mostly optimistic guy, it's kind of weird for me, but I do like to look at everything. And one of the reasons that some of the feds were more reluctant and wanting to do a smaller cut, or one of them actually dissented for the first time in 19 years and said she actually didn't even want to cut, was consumer spending. But we also have to keep in mind that savings accounts have been going down and credit has been going up as far as utilization goes. So every dollar that's supposedly strong spending right at the moment is just a dollar that's not going to be spent in future months. It's just going to be kind of like our federal deficit just to service the debt for something that was already bought. So I think that's a lot of hopefully what the people that are looking a little deeper into this thing are looking at this point. Again, I would have liked to have seen it corrected, a few months ago, but if it takes an election or if it takes the actual numbers, whatever, let's just give the people some relief. Banks are having trouble, keeping capitalized right now because they loaned out a bunch of money at really, really low rates. And when they go back to borrow that money, it's not that cheap anymore. So I'm hoping this doesn't crush a lot of the community banks and they can survive until rates get low enough. So we don't just end up with one or two mega banks in this country.
So I
And
wonder how much that played into the bigger picture of their decision at
I
the
don't think they
Federal
really
Reserve.
care anymore. I'll be really honest. I just watching, I don't think they care. I think that they're looking at unemployment and they're looking at inflation and they update a lot of things, but one thing they don't update is one of the most stubborn pieces of this, which has been the shelter cost, and that's a lagging number. That's a 12-month average. So
Hmm.
you're going to take a daily snapshot, it's under control right now. But if you're still averaging it, you got a lot of months to make up for that. And I think that's part of the reason that they, again, went to the more, and lean back on the dual mandate of the unemployment piece of this thing rather than waiting for us to try to get to 2% inflation, which again is not super realistic. But
Hmm.
on the bright side, gosh, if you have a decent credit score and you don't have 20% down,
Yeah,
mortgage
let's talk
insurance.
about that. What's the lowest
Well,
down payment you can
well,
have?
the lowest down payment you can have is 3%. Other than some community lending, some grant programs, but those generally have a terrible term hair on them. There's always something like a recapture or, meaning that if you sell that house, you're not allowed to realize the profits that they get them. So,
Oh,
if you can somehow come up with 5% down, you're going to get kind of the best deal. Now, FHA is lower than that at 3.5, and Fannie Mae, Freddie Mac will do a 3% down loan, but the mortgage insurance is going to be more expensive on it. And so I mean, if you can somehow, again, family can step in, they can gift you a little bit of money. If you can get to that 5% mark, you're not going to be stuck with the FHA mortgage insurance forever without
hmm.
having to totally refinance out of it. If you have a decent credit score, you can still get decent mortgage insurance and, not a bad rate. So, 5% down is what I'd really like to see from everybody. But, sometimes if your credit score is not perfect, and FHA is the right answer at, a little bit cheaper. Well, anyway, I'm sorry. My phone literally rang right in the middle of my sentence right there. I'll be honest. So
So
I
three and
got
a
it.
half percent down, 3%, you said 3% down.
Yeah, and
Yeah,
if
but
you're
5% is better.
if
So it
you
doesn't have to be 20%.
no, and if you can fit into, depending on your income, if you can fit into a home ready or a home possible, one of them's Fannie Mae, one of them's Freddie Mac, they'll reduce your mortgage insurance a little bit, give you a decent rate. So I mean, that's not necessarily a bad thing for you. But I mean, it's on, come in and talk. There's so many different options right now to look at. We got sent one last month from a bank that couldn't figure out how to do it because the guy was showing a lot of losses on his bank statements. So they came to us with a bank statement loan, and we ended up actually digging deep into the taxes, figuring out a way just to do a conventional loan for the guy. And
Oh,
anyway, so really, even no matter what you're thinking, it's good to just sit down and talk. I'd rather know and come up with a plan to get where you want to be than wait till you have to do something and then try to address everything at that point. So,
That's a really good suggestion. And I don't know that people realize that just going in and having a conversation, even if you're not thinking of buying a house, is a good thing to do just to see where you stand financially.
and you could walk out thinking, man, you know what? I'm never thought I could buy a house, or you could walk out thinking I thought I was in pretty good shape and I was right,
Right.
you know? Um, so yeah, it never hurts to have those conversations, and it definitely doesn't cost you any money to have those conversations.
Yeah, yeah, and it's a really good feeling. And it doesn't matter if you've lost a house, if you've done a short sale, or a bankruptcy, had a divorce. It's okay to come and talk, and if it's too soon, right? Because sometimes it's too soon. You got to
Hmm.
wait longer. You can advise them very specifically of what steps to take, how long to wait, and
And
everybody can buy a house again, even if you go through some of those traumatic times.
well, yeah, and even more importantly, what you can do to prepare. It's nice if
Yeah.
you have a year heads up, you know.
Mm-hmm.
Even if it wasn't a bankruptcy, even if it's just you're saving money, we can go in and we can take a look and see, what is your payment going to look like? And then
Mm-hmm.
I have people start paying themselves that right now, and in that
Oh,
way they
good
didn't buy a
idea.
house, and now they're stuck with that payment. They've practiced, and they might come back to me when they're ready to go and say, you know what, that was super easy. I'll go up a little bit on my purchase price, and I got a raise. Or they might say, wow, that wasn't that good. Maybe we'll go down $30,000, and then we can have that conversation to get them in the right product. But having a little prep time for that always beats trying to do it when you're either in contract or forced to move. So,
Yeah, yeah, and it's just a very, very good feeling. um so what about the veterans programs? Are those interest rates going to be affected?
well, I mean, nothing is necessarily affected by what the Fed does. It's just because they walk hand in hand. You have the
Mm-hmm.
Fed, and you have the Fed controlling your equity lines of credit, your car loans, your credit cards, things like that. We're traded on the mortgage-backed securities, but you're always going to get a little bit of a better deal on an FHA, or pardon me, either an FHA or a VA loan. What it boils down to on the VA loan, really, if you have any service connect disability or not, it's still kind of nice to to have an FHA loan because you don't have to have a down payment. But that said, if you God, you're killing me. Um, okay. Anyway, so somebody walked in right after the phone call, and here I go again. So if the 100% down payment is still a really, really good option, even if you have to pay that funding fee if you don't have Service Connect disability, but the rates are really good and low on those. So
Yeah. So on average, how much lower would a veterans program rate be? Like, is it a
probably
whole
a,
point or 2 points?
a
What
half
is
to
it?
3/4 maybe.
Really?
So yeah, so I mean, and there's no mortgage insurance, so there's
Awesome.
some good benefits. But even if you have 1% disability, then you're not subject to that funding fee. And if you've been in the Guard over 6 years, you're eligible for it also.
Really?
Yes. So there's a lot of good things with the VA loans.
Okay. Well, we're going to have to get ready and take another quick break. I want to say thank you to our sponsors, John L. Scott, Ashland and Medford, Guy Giles, Mutual Mortgage, and our local Rogue Valley Association of Realtors. We do appreciate your sponsorship. It allows us to bring this show to the airways every single week, and all the good information from people like Guy Giles, and very timely, right? Thank you, Guy, for coming on the show today.
Hey, thanks a lot. I will
Oh,
talk to you guys next time.
we'll be right back with Guy Giles. Well, hey, Southern Oregon, welcome back to the Real Estate Show. We're finishing up here with Guy Giles, Mutual Mortgage. And, that Federal Reserve announcement you say you were expecting, but a lot of us, I guess, in the real estate world, we were surprised. We were thinking they were going to do a quarter point or none. And you just could have knocked some of us over with a feather when they announced half a point. And the other thing I wanted to ask you was, I'm hearing some chatter that they are considering more rate cuts
Oh yeah,
or even the end of the year. Is that true?
There should be one on November 7th and one on December 18th, yes. So they'll have two more this year, and then they should have, they're not going to accelerate them, meaning, I don't even, I just kind of made that up, but they're not going to stay at the 50 basis point, I don't believe. It should be 25 at a time, and they're anticipating another 100 basis points next year already. So, we're looking at 200 basis points altogether. And again, we took care of about a quarter of that this week. But I mean, yeah, I mean, honestly, it's pretty predictable as far as this goes.
Yeah. Well, and here's the thing is it doesn't matter to us in the housing industry what the Fed does because we deal with it. We adjust, we inform our clients, we make the changes we need to, and we still go on because people still need a place to live, right?
They'll always need a place to live. And no matter what the difference is in the rate, you're still going to outpace that with your appreciation on your house in the long
Mm-hmm.
run. Because if you're paying interest on a loan, you're paying higher interest up front. I don't mean that your interest rate is going to change, but you're paying a lot more to interest and a lot less to principal. So the longer you're in that loan, it's almost like your rate is going down a little bit.
Because
And
you're servicing principal.
yeah, and your house is compounding. So it's getting bigger, by by multiples every year. So if it's up $20,000, now you have $525,000 appreciating next year, and then 550 appreciating the following year. So it's always a good time to buy as far as that
Mm-hmm.
goes. Don't
And
let
you get a
rate.
place to live.
Yeah, yeah. And honestly, I'm seeing a move also towards, you look in Chicago or different places where they're saying, "Oh, look how many housing units we put in." They're apartments. They're not single family residences. Their
Right.
goal is not to give everybody a house with a yard for their dog. Their goal is to have everybody in town. And I don't mean to think that there's this weird, morbid people running the world, but somebody out there is not really letting us build on our land, and they're moving everything to
Well,
apartments
it's more
in town.
economical to do a complex than do 10 single family homes, but it's not really what people want.
No, no,
Yeah. And I
but
guess it's more appropriate in a downtown urban area.
I, yeah, I mean, I guess whatever you get, what you vote for. This is
Yeah.
what it is.
Yeah. And we have
So
some of that construction going on in downtown Medford.
yeah, and people are moving, and if people are happy like that, that's totally cool. I just at the end of the day, they're not building enough houses that you're right, people want. So I don't see the prices going down, and you might as well get yours now because
Yeah, exactly.
it's
And
only going to
then
go up.
yeah. So some of the baby boomers that would normally age out of their homes, um there's been a delay in that transfer, if you will, because the healthcare system is better than it used to be
Yeah,
and they don't want to move. So I have a lot of conversations with elders that they really want more adjustment to the house physically so they could stay there.
and I would love to see actually the kids just move in with them, adjust the house a little bit,
Right. There's
and
a good
then
idea.
everybody's together, and then someday, that'll
Then
be
it would be
that'll be
their
your
house.
house.
Yeah. Yeah,
But
that's actually a good idea.
yes, I anyway, so that could be one bright side to everything that's going on right now. But you are right. I am seeing 70-year-olds and 80-year-olds that I would take for 50-year-olds these days. I mean, I don't
Yeah.
know if people are just eating better or exercising, or maybe I'm just old now. But it's amazing to me that some of the people, I mean, that guy from California, he's 85 years old, and he rode his motorcycle to look at houses. Yeah,
Wow.
absolutely. He's got a nice BMW, and he went there to do that. And we're talking about riding in the woods when he gets here because he hasn't done that on quads yet.
Wow.
So
Well, see,
People are
and that's
cruising.
it's yeah, and so they're physically lasting longer and they're mentally taking longer to say I'm older and I'm ready to downsize.
Yeah. Well,
Yeah.
when you have an 85-year-old guy saying, I'm going to wait till spring because I'm going to get a bunch of yard work done around here, he's doing all right.
Yeah, so that's just one explanation for some of the reason for low inventory.
Yeah. Yeah. I mean, and again, it could be the rates. It could be, they want to preserve their old one, or it could be that they want to, just looking at the reality of jumping. Well, now you're only jumping to around 6%, but
Hmm.
before you were jumping to 7.5%. So
Hmm.
it is coming around. It is getting a little bit better. And realistically, you're only here for a while. So you might as well be in the house that you want to be in. And if that means selling your old house, then I'd do it.
Well, and it'll be interesting to see as the weeks go by because this rate cut is kind of new, um, even
Yeah.
though some of some of you thought it was coming. But as the weeks go by, the market is pretty quick to adjust. I mean, the digitization of housing and mortgages, there's not a big delay anymore between when something happens in the financial world and the experience. It trickles down to the direct consumer experience pretty
Yes.
quickly. So I'm thinking within a month. Do you think that's too soon?
As far as the rates go or the people?
Well, just for the market, the humans to respond. When we say the market, we're talking about people.
I don't know. I don't know all of your technical terms as far as that goes, I guess. But no, I mean, as far as people go, it's I
So like
can't
by
figure
the
them out.
holidays, by the
I can't figure
holidays,
them out. Yeah, and
because
then but by the holidays, does that mean everybody's going to want to settle down so they don't have to decorate or undecorate?
well, and just the time it takes to get pre-approved and get your documents together and all that. It's
I
if you're really organized or you've already been approved, that's like a week. And then if you're not and you're just starting from scratch,
if
that's
you're starting from scratch, I could still close the first week of next month really easy. I
mm-hmm.
mean, we're like you said in a digital age right now where we're pulling most things electronically, and if we need to document something, just you know get out that W-2. It's not super hard,
Mm-hmm.
and a lot of times we're getting appraisal waivers. We can close fast right now. Nobody's under the gun, or buried in refinances yet, but. I will promise when that happens, my eye is always going to stay focused on purchase money. I'll do the refinances, but they'll happen in the background and we'll get you a good rate. But
Mm-hmm.
these, the purchases always have to happen.
So are you getting a lot of requests for refinance yet?
I'm starting to get calls, absolutely. And I have been
Mm-hmm.
for a few months as far as that goes. And probably some people kind of make sense. But thankfully held them off just a little bit. I'm really not in this business to make a quick buck. I'm in it to do what's right for the clients. And
Yeah, because you've been doing this a long time.
yeah, and if you can wait just a little bit, it might save having to do that second refinance. So just be careful when Quicken calls you up and starts talking about how much money you're going to save every month. Call me and let's really go over it and do it at the right
Mm-hmm.
time. If for no other reason, their rates are always higher. Every time their rates have been higher than ours anyway. So
Wow.
I've never gone up against them and had them compete. So anyway, just make sure you're doing it at the right time. So if you have questions about it, call me. I've been, honestly holding people off just a little bit because I think that these rates are going to continue to drop. And you, in this day and age, if you purchase, you can refinance whenever you want. But if you refinance, you do have to wait 6 months now before you can
Oh,
refinance again. So I don't want to get, somebody in there and then January it's the lowest. But anyway, sooner the better, but it really needs to pencil out.
and even if you're not thinking of buying, go get a mortgage checkup just to see where you stand. You might be
Yeah.
pleasantly surprised.
It's free and I will always commit to shooting you straight. And if somebody else has something better, believe it or not, I'll let you know that too.
Yeah, he's a straight shooter. Well, thank you so much for coming on the show again this week to talk about this big rate cut from the Federal Reserve Bank.
Well, thank you very much. It's good to be here.
All right. Thanks, Southern Oregon. Have a beautiful weekend, and we'll catch up with you next week. Hug those you love. Bye now.
Thanks. Bye.